Everyone said the biggest threat to Indonesian investors would be a stock market crash. They were looking in the wrong direction. The bigger threat was something far less visible, something that looked like opportunity, something that promised access to American stocks, something that borrowed the name of Warren Buffett, and something that convinced thousands of ordinary people they were making smart financial decisions. If you have ever looked at an investment platform and felt that something was slightly off, this story may confirm exactly what you suspected. Because the question is not whether scams exist. The question is why so many intelligent people continue falling for them. And the answer is far more surprising than most people realize. If this kind of content matters to you, staying until the end is the only signal I need. Not because of the numbers, not because of the headlines, but because understanding what is happening right now could save someone from making a very expensive mistake. Assalamu alaikum. A few years from now, Indonesia could have tens of millions more active investors. The country already passed 20 million investors in 2025. Digital investing has become easier than ever. Opening an account takes minutes. Information travels instantly. Investment discussions happen everywhere. TikTok, YouTube, Telegram, WhatsApp groups. And that is exactly why this matters. While more Indonesians are entering the world of investing, scammers are entering with them. The opportunity is growing, but so is the risk. In 2025 and 2026, regulators reported thousands of complaints related to illegal financial activities. The shocking part is not that scams exist. The shocking part is how sophisticated they have become. Many no longer look like scams. They look professional. They use financial language. They show charts. They reference global markets. They mention American stocks. Some even use famous investor names. And that brings us to the biggest question. If Warren Buffett genuinely believes in American equities, why are so many people losing money through schemes connected to that same dream? The answer changes everything. Most people think scammers sell fake investments. That is not actually what they sell. They sell certainty, and certainty is extremely attractive. Consider this. Real investing is boring. Real investing requires patience. Real investing includes risk. Real investing sometimes moves sideways for months. Scams remove all of that. They promise speed, they promise simplicity, they promise consistency, and that is exactly why they work. Indonesia's investor population has expanded dramatically in recent years. Many investors are entering the market for the first time. You are probably thinking something right now. I would never fall for that. Most victims thought the same thing. The issue is not intelligence. The issue is psychology. People do not buy scams because they are foolish. They buy scams because the story sounds believable, especially when the story contains something that is already true. American stocks have created enormous wealth. That part is true. Warren Buffett became one of the world's most successful investors. That part is true. Long-term investing works. That part is true. The scam begins when someone takes these truths and builds a false shortcut around them. That is the difference, and it is a difference worth understanding. If you've ever seen an investment opportunity that felt too smooth, remember this moment, because the next fact reveals why. Let me ask you something. What do scammers fear most? Regulation? Technology? Law enforcement? Not exactly. They fear educated investors. That is why many scams focus more on emotion than information. Indonesia's financial inclusion rate has grown rapidly, but financial literacy still trails behind inclusion levels. That gap matters a lot, because access without understanding creates vulnerability. Imagine giving someone a powerful tool without teaching them how it works. That is where mistakes happen, and scammers know it. They know that many investors want international exposure. They know American markets attract attention. They know Warren Buffett attracts trust, so they build marketing around those desires. Notice something interesting. They rarely focus on risk. They focus on outcomes. They show profits. They show luxury. They show success stories. Real investing discussions spend significant time discussing risk. Fake investing discussions spend significant time discussing rewards. That difference alone can save you money. Here comes the concern. Some fraudulent operations look more professional than legitimate businesses. Professional websites, professional graphics, professional customer support, professional social media. Everything appears credible until withdrawals become difficult, until communication stops, until the money disappears. Then the professional image collapses. But by then, it is too late. And the numbers show the problem is not small. Authorities reported enormous financial losses linked to scams and illegal financial activities. The lesson is simple. Professional appearance is not proof. Verification is proof. Keep that thought in mind. Because Warren Buffett's real message is often the opposite of what scammers want you to hear. One short declaration: patience beats excitement. That sentence sounds simple, yet it separates investors from victims. Warren Buffett's investment approach was never built on quick gains. It was built on discipline, long-time horizons, business quality, risk management, and emotional control. Notice what is missing: urgency. Scammers need urgency. Investors do not. Scammers say act now. Investors say think first. Scammers promise certainty. Investors evaluate probability. Scammers sell emotion. Investors study reality. That contrast is everything. You might be wondering whether American stocks themselves are dangerous. The answer is no. The danger is misunderstanding what investing actually means. Berkshire Hathaway continues maintaining substantial exposure to American equities. That should tell you something. The world's most famous investor still believes in long-term ownership of productive businesses. Not shortcuts, not guarantees, not secret systems, not miracle platforms. Ownership. That single word changes the conversation. When you buy legitimate investments, you own something. When you enter many fraudulent schemes, you own nothing. That distinction is often hidden beneath marketing language. And that is exactly why intelligent people get trapped. The scam is not always obvious. Sometimes it arrives wearing the clothes of legitimate investing. Remember the question from the beginning? Why are so many intelligent people still falling for these schemes? Now we can answer it. Because intelligence alone is not enough. People become vulnerable when confidence replaces verification, when excitement replaces research, when urgency replaces patience. The biggest reveal is not about HAT12. It is not about one platform. It is not about one scam. It is about a pattern that repeats whenever investor growth accelerates. More investors enter the market, more opportunities appear. More bad actors follow. The cycle repeats. And that cycle explains why Indonesia's investing future can be incredibly promising while still containing significant risks. Both statements can be true simultaneously. That is the insight most discussions miss. The smartest investors are not the people who avoid investing. They are the people who verify before investing. That difference changes outcomes. Before we close, here's something worth remembering. First, you now know that real investing and scam marketing often use similar language but completely different intentions. Second, you now know that the promise of American stock wealth is not the danger. The promise of effortless wealth is. Third, you now know that Warren Buffett's actual philosophy revolves around patience, ownership, and discipline, not shortcuts. If this perspective gave you a new way to evaluate investment opportunities, share this video with someone currently exploring investments online. Not because they need another warning, because they may need a better framework. The future belongs to informed investors, and sometimes the most valuable investment is not the one you make. It is the mistake you never make.